Recently, the Nidhi companies have been in news, right? So we will be seeing what the news is all about. Is there a concern? What concern that is there, which has brought them in news? That's one thing. Secondly, we will see everything about the Nidhi companies, what they are, how they are regulated, and how do they go about their day-to-day activities, and what activities actually they do. So first things first, what is the news? The news is that the Ministry of Corporate Affairs, the Ministry of Corporate Affairs has actually penalized over 2 dozen Nidhi companies. Right? Why have they done that? They have done that, of course, because there has been a violation. Violation of what? Violation of the Companies Act 2013. Violation of the Companies Act. Now, the moment you understand that there have been a violation of the Companies Act, that means they should have been following this act, but they are not following as they are supposed to. All right. So, violation of Companies Act. Now, it will have a lot of things under it. So there are specifically 2 things under the Companies Act which they have not done specifically. What are those 2 things? Number one is delayed financial filing, and second is issues with share allotment. Okay, first is a very straightforward thing, delayed financial filings. You have to do the financial filings as to the source of generation of revenue, how much it is, what it is, etc., etc. Like an individual has to file for income taxes, in the same manner the companies and even the Nidhi companies has to do that. There has been delays in that. At the same time, issues with share allotment. The share allotment is having certain concerns. The, let's say, weightage, etc., etc., are not how it should be. Now, the idea is not to go into the detail of this, but the idea is to go into the detail of the Nidhi companies. Okay, so let's go on. More on the news. See, of course, over 2 dozens Nidhi companies have been, basically responded to by the Ministry of Corporate Affairs for violation. Now, the thing is, most of the violations have occurred in the state of Tamil Nadu, and majority of them failing to submit financial statements and annual returns on time. So Tamil Nadu is the state which is majorly hit by this, and with respect to the 2 reasons we saw, the major reason is the failing of submission of financial statement. I hope that's clear. The registrar of companies. Registrar of companies means what? See, a company has to be established or registered under the Companies Act. So you get it registered via a registrar. Registrar of the companies. There would be other registrar also. For example, if you are getting your marriage registered, again you have to go to the registrar office. In the same manner, registrar of companies is there. Right? So this registrar of companies has emphasized the importance of compliance. Why compliance is so important? See, the members, the subscribers, the people who are a part of Nidhi companies, who get benefit from the Nidhi companies, who provide their hard-earned money to the Nidhi companies, which then can be further given out as loan and support to other members of Nidhi companies, they are basically not too big, humongous, huge, rich, wealthy people. Rather, people having small savings, small amount of savings at a lower level generally is the case. So they would be less aware of their rights. They would be less capable of taking actions. So they should be even more protected than, let's say, big firms or big wealthy people who can take care of themselves. Of course, they also needs protecting, but these people would need more protecting. So talking about protection of the small investors, right? Why? Because Nidhi companies hold money in trust for their members. So small investors should not get hampered. That's the concern the registrar of companies has also shown over here. Now let's know a bit about the Nidhi companies. So what is the meaning of Nidhi companies? See, there are non-banking financial companies which are similar to bank, but they are not banks, because they do certain things that are similar to banks, but they do not do certain things which the banks do. So those are NBFCs, right? We have seen NBFCs in different lectures, etc. So Nidhi company is nothing but a type of NBFC. A type of Nidhi company is a type of non-banking financial company. Non-banking financial company. Okay, so they are non-banking financial entities primarily involved in what? Borrowing and lending of money. Yes, borrowing and lending of money, but among their members. So they can borrow only from the people who are the members of that Nidhi company, and they can lend only to the people who are the members of the Nidhi company. So they cannot borrow outside, they cannot borrow from someone who is not a member, they cannot lend to someone who is not a member. Being member is the most important thing over here. And of course they are governed by the Companies Act 2013, under the Companies Act, specifically section 406 of the Companies Act. And further they are intended to what? Financial inclusion, sort of financial inclusion, focusing on small investors, hard earned savings, savings as a small amount of savings. So they are there for financial inclusion, yes, within the community, within its members, and to promote savings. The moment you are associated with one such kind of a company, you would want to, the idea of saving, develops in your mind. Then month on month, you would keep on saving more. So it promotes saving and it helps in financial inclusion. As far as licenses are concerned, it is not required to receive the license from Reserve Bank of India. They do not require RBI's license, though they will be governed, regulated by the RBI, but does not require RBI's license. In fact, they would have double regulation. Why double regulation? Because NBFCs are ultimately regulated by the RBI. At the same time, since they are registered under the Companies Act, they would be governed by the Companies Act as well. And that is what some Nidhi companies have violated, and that is why a crackdown on them. Right? It is registered, of course, under the Companies Act. Now, there are certain activities which the Nidhi companies are prohibited from doing. That is chit funds. Chit funds, hire purchase finance. Hire purchase finance, to hire something, you have to finance it. That finance they are prohibited from. Leasing finance, for leasing something. Insurance or security businesses, they are prohibited from insurance and security businesses. Reason being, insurance and security, especially security businesses, could be fluctuating, so you would want more safety net. That is why these things are prohibited. Strictly prohibited from accepting deposits or lending funds to any other person except the members. Again, the thing is being repeated over here. It's very clear. It can only borrow from its members. It can only lend from its members. Again, a reiteration that it cannot borrow or take deposits from non-members and cannot lend to non-members. Now, who can be the, how many members are required to start a Nidhi company, sorry. So when it comes to members, minimum 7 members are required to start. That does not mean only 7 members should be there, but minimum 7 members are required to start Nidhi company, out of which 3 members must be the director of the company. I hope this is absolutely clear. Very factual, very important for your prelims examination. Significance: popular majorly in southern India. In southern India, they are more popular than they are in northeast India, West India, Northeast India, etc. In southern India, they are more popular. Of course, key player in the financial inclusion and financial system, as they mobilize funds from the members. Mobilizing funds as in the fund, if not mobilized, would have remained at home. What happens is, economic survey has said that India has a high percentage of saving rate at approximately 33%, but a lot of this saving remains at home in the rice jars, etc., and not in the market. So it will promote mobilization of funds from the members and give loans to them at a lower interest rate than the commercial bank. I hope that's absolutely clear. Now, furthermore, formation of the company, it's relatively easy. One thing we saw, that you need minimum 7 members. Apart from that, it is, even that is a very easy thing to do. So entirely it is relatively easy to form. You need 7 members and it requires a minimum capital of rupees 10 lakh. Only 10 lakh worth of capital is required, and at least, of course, 7 members, of which 3 must be the directors. So this is again factual thing. Again, 10 lakh is the minimum capital requirement. Again, these are very important for your prelims examination. So this is what they can ask. Apart from this, There's nothing much in prelims that they can ask. What they can ask in mains is about the significance of Nidhi companies in India's strive towards financial inclusion. Discuss. Right. So this is all about the Nidhi companies. Thank you.